It's time for the Your Personal Bank Show with Ference Toth. In an era of chaos, confusion, and craziness, Ference is a voice for common sense. As a financial literacy educator, speaker, and entrepreneur, Ference cuts through the noise to help us understand how current events affect our money, economy, and our freedom. Now, here's Ference Toth.
Welcome to the Your Personal Bank Show. This is Ference. Well, I've run into something recently that I find very troubling, and I need to bring this up because, well, it's an issue that I know I can address and help people with. And the issue is this. I've been sharing the personal bank concept for nearly 5 years now here on the radio, and the idea has gained traction. More people are aware of it. The education has increased. All those things are great. And the idea of growing your money insured, guaranteed, tax-free, highly liquid, and the ability to create positive arbitrage, again, it's gaining traction and more interest with more and more people. And that is my goal. I'm excited about that. Unfortunately, as with anything that's new for most people, again, this idea is not new. Institutional investors have been doing this for well over a century. But I'd say for most people, the average individual, this is a new concept. They're not aware of it. With that, there's growing pains. And one of those growing pains that I'm running into is advisors, insurance agents, people like that out there that are selling this product to people, and either they are doing it intentionally or unknowingly. They are actually hurting them more than helping. And the reason I bring this up is this past week, in fact, I ran into 2 such clients. They had some understanding about the personal bank concept. They had somebody else bring it up to them, introduce the idea, and sell them a product. Now, why they didn't reach out to me to get a second opinion, obviously they're wishing they had. In both of these cases, they got raked over the coals and taken advantage of, frankly, from the stance of what it was they were looking for, what they wanted, and what they were told. They were misled, we'll put it that way, at the very least. And unfortunately, because of the lack of understanding by a lot of consumers and a lot of insurance agents and financial advisors, frankly, misleading. It's easy to do. It's easy for somebody to not realize what's going on. Well, I'm going to give you right now, and I'm going to share this and repeat this and put it on my website, one simple key tactic, one thing all you have to do to look at is to understand if you are maximizing your cash value in a life policy like we discussed on the personal bank concept. And that idea is this. Day one, you should have at least, at a minimum, 50% of your cash, of your contribution available day one. In most cases, by the way, it's more like 60% or higher on what we call multi-year funding plans. So in other words, if you're going to fund a plan for a number of years, you should have 60% plus liquidity day one. If you do not, and I repeat, if you do not, that is a very clear and infallible way to determine whether your policy is structured correctly to maximize cash values. If it's something less than 50%, I'm going to tell you straight up, your policy is not designed, it is not structured to maximize cash value. Plain and simple. There's no 2 ways about it. There's no way to get around this rule is what I'm trying to say. On a plan where you're going to fund it, what we call front loads, where you're going to put majority of the money in up front, your liquidity should easily be 80% plus. I find less of an issue on those, less common, I should say, than I do on the multi-year plans where they're funding over multiple years. Again, when you're funding these policies, the extra cash is going to go one of 2 places. It's going to go into your policy to you, the client, or it's going to go to the commission to the agent. I always say, think of it as a teeter-totter. Maximize cash value, minimize death benefit. Most insurance policies, you put the cash on one side, the death benefit on the other, and most policies have little or no little or no cash value. Term insurance, for example, has no cash value. That will not work for a personal bank or max cash value policy structure, but it's maximizing death benefit, right? You have no cash value with the term and you're maximizing the death benefit. Most people understand that. Again, thinking the teeter-totter, we flip that teeter-totter, we maximize the cash significantly. Again, 50% is bottom line minimum. Cash available on your contributions day one. You should, secondly, you should have access to 100% of your money within a few years. That can vary depending on the case, the age, the amount of money you're funding, all those kinds of things. But hard and fast rule I'm going to tell you is you in a multi-year premium case plan, we're going to fund it for multiple years, you better have 50% cash available day one or more, or your plan is not structured to maximize cash value. Plain and simple. If you have any question about it, or you want a second opinion, contact me at yourpersonalbank.com. I'll be happy to share with you and compare and show you the differences in the numbers. By the way, in both of these cases, because what the client had requested and thought they had, and they were frankly misled, and frankly there was some fraudulent activity that went on with the agent. In both these cases I ran into this past week, it looks like we're going to be able to reverse and refund all of their money. So that's another thing where I can help you if you reach out to me at yourpersonalbank.com. If you have a situation where you have less than 50% of the contribution available day one on a multi-year plan, or less than, say, 80% of the money available in a front load, or where you put most of the money up front day one, contact me at yourpersonalbank.com. If you were misled, or if you felt like the situation was not fully disclosed to you, I might be able to help you in getting a refund. Again, when there are misleading or fraudulent activity, you have rights as a consumer, and I can help you walk through that process. It's not that I'm out there looking for people to find that, but I feel because I'm one of the key folks out there, one of the voices educating, this is a great tool. It's a great financial tool. It can do awesome things for people. I hate to see people getting taken advantage of or misled. And unfortunately, as I stated, I saw 2 of those cases just this past week. Keep it simple. Look at your cash value. Look at how much you contributed in the first year. If you have less than half, your policy is not structured to maximize cash value if you're funding a plan over multiple years. If you have a plan where you're funding most of it up front and you have less than 80% of your contribution available day one, you do not have a policy designed to maximize cash value. If that was your goal and your plan, and you were clear with that with your advisor, your insurance agent, whatever, and it did not happen, of course you were misled and possibly fraudulent. Again, I can help you identify those things and perhaps get a refund even if that was a situation. Just because you have less than 50% or 80% of your cash available day one doesn't mean you were misled or fraudulent, because sometimes plans are structured to maximize death benefit or have a higher death benefit because you have those types of needs. So I'm not saying every case like that is fraudulent or misleading. I'm saying the ones where that was your goal, to maximize cash growth, and that didn't happen. You were misled or perhaps even fraudulently sold something, and I'm here to help. That's the other thing I would say too, is if you're going to invest a significant amount of money in a financial tool, just like getting a surgery, we always get a second opinion. If you're having somebody recommend something like this to you, whether it be a high cash value, frankly, any insurance type of policy or annuity, I've been doing this for 25 years. I'll be happy to give you a second opinion, no cost, no obligation. Why would you invest that type of money without a second opinion? By the way, because I'm independent, I have access to dozens of insurance companies, all the top carriers, all that type of stuff. I can probably show you a better option than the one you're looking at. In fact, when I do those comparisons, approximately 90 to 95% of the time, I show a better option than the one the person was looking at. There you go. You would have a better situation. You'd have more money, more cash. I can also show you how to gain more positive arbitrage. Here's a second area where it really gets into be a difficult situation for the client, and it's this. True positive arbitrage with these policies, the best positive arbitrage is going to come from using the bank lines of credit, because that's where you see typically dividends or interest credits are higher than the interest rates the banks charge. You can get some positive arbitrage using policy loans, but it's going to be minimal, folks. So if somebody's telling you to access through policy loans, this is the second big thing to look for, whether you're getting a case that's maximizing cash values and allowing the maximum positive arbitrage. If they're only discussing or using policy loans and not bank lines, you will not get the best positive arbitrage. And the reason is quite simple. Sometimes it's cheaper to borrow from the banks and sometimes it's cheaper to borrow from the insurance company. By the way, most of the time, it's cheaper to borrow from the banks. They have the lower borrowing rates, usually prime, prime minus, okay, prime minus half, prime minus one. The insurance companies sometimes have that, but again, the vast majority of the time, it's through the bank lines, sometimes with the insurance policies. The bottom line is you want to have the option of both. And many companies, the banks will not loan against. So I can share with you, frankly, folks, there's only about a half a dozen insurance companies that the banks will loan against. So that's another part of it. If you want a second opinion and you tell me just the name of the company, I'll tell you where the banks will loan against it or not. Again, these banks do significant amount of research, due diligence. Their money's on the line, right? The cash in the policy is the collateral for their loan when they loan monies against these. No one looks at these policies closer than the banks do because, again, their money's on the line. So why would you work with a company that the banks would not loan against? One, that would tell you something if they're not on the list, the approved list. And if they are on the approved list, that also tells you something. I always say you can love banks or hate them, but you can certainly learn from them and you can follow their lead. They're savvy about money. So don't go with a company the banks won't loan against. You'll never see the best overall year to year. You will not get the best positive arbitrage. Most of the time you will not. And secondly, you got to make sure you have when you have a high cash value policy to maximize cash growth. Again, if you're funding it for multiple years, you want 50% plus cash available day one at least or higher. And if you're funding it up front, where you put most of the money in up front, you want 80% of the cash value available day one at least or more. Two, that's one really super simple key to look at. Again, if you have any questions or it's not clear or your advisor or agent's not being clear about it, by all means, even if you did it a few years ago, if you were misled or was fraudulent even, we can certainly consider looking at reversing it, getting a refund for you and putting you into something better, or 1035, even if you did it many years ago. We can often put you into a better product with higher cash values, higher growth, without any tax consequences or anything. So whether you're considering it now, whether you did it just recently, last year or two, or maybe you did it years and years ago, decades ago, we often can improve the situation if you have a policy you're wanting to particularly if you want to maximize cash values. So again, contact me, yourpersonalbank.com for more information or assistance or comparisons. We'll be happy to help. Stay tuned in the next segments. I've got some other stuff I really need to share that I think you're going to find super valuable.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference, and if you missed the first segment, I'm going to highly encourage you to go back to yourpersonalbank.com. You can listen to this or any of the previously recorded shows. And the thing I was really discussing is those people that looked into the personal bank concept or wanting to maximize cash growth through a life policy or an annuity for that matter, and they didn't get maybe the best product that they could have gotten, or let's face it, maybe they were misled and even in some cases fraudulently. I've helped a number of clients recently, in fact, get refunds, do 1035 exchanges, putting them in better positions. I'm independent. I can literally work with just about any company. I'll show you alternatives that are probably better, frankly, in most cases, much better than what you have right now. So again, if you have a high cash value insurance policy or an annuity, I strongly encourage you to contact me at yourpersonalbank.com, because that's the other thing. The interest rates have gone up. The products today, the newer annuities and life policies are far better than the ones even a couple of years ago. And you might be shocked at how much better of a product you could end up with, really no cost, because of 1035 exchanges and rollovers. We have all types of tools we can use to improve your situation, okay? And even if you have a penalty and say, I can't get out because of a penalty, I've got products that'll pay the penalty off. They'll pay you a bonus, pay the penalty off, and then you'll actually earn more going forward. So you don't go backwards at all. You accelerate your growth going forward. So that's what I'm saying. Encourage you to contact me, yourpersonalbank.com, for that. we need to cover some other things about the economy and what's going on. So this recent article, I'm going to post it on our website, yourpersonalbank.com. It's JP Morgan warns the S&P 500 could tumble 20% by the end of the year, into 2024. And they're citing several reasons behind this. As they pointed out, hey, the stock market soared to a new record recently. The Dow hit a new record, so did the S&P. And as they put it, the forecast from JP Morgan's is one of the most pessimistic because, as he stated, with very, very high equity valuations. That's where we are, of course, at or near all-time highs, obviously. As he states, we do not see equities as attractive investments in the moment. I've even seen some people discuss, the normal, 60-40, stock bond mix portfolio, modern portfolio theory we always hear. Now, I've even had some people saying you shouldn't have more than 30% now in equities because of the valuations have gone so high. Warren Buffett has now sold over $20 billion in equities. In fact, even sold a lot of his stake in Apple recently. In fact, Warren Buffett is sitting on more cash than at any time in his career. Now that's saying something. And he even stated recently, just a few weeks ago, that he will get back in the market when it crashes. That's a quote from Warren Buffett. That guy's been pretty right on most of the time. Pretty sharp dude. They're saying the gains that we've seen recently are unlikely, this is again according to JP Morgan, are unlikely to last. Interest rates are likely to remain higher for longer. That's what we keep hearing from the Federal Reserve. And there are signs of stubborn inflation and evidence of weakness among lower income consumers. These are all reasons that they're very pessimistic or extremely defensive to the market now. He also stated, JP Morgan, that a boost from artificial intelligence is unlikely to offset the other risks. In other words, artificial intelligence may become something really big, but it's not going to happen in the near future. It's something a little bit farther down the road. That's the point they're making there. And then I have a second article. I thought this was very interesting. Previous shows, on a number of occasions, a number of leading economic indicators that, typically point to future recessions. One of the most common ones most people are familiar with is the yield curve, bond yield curve inversion, the 10-year and 2-year. In other words, when the 2-year bond is paying a higher rate than the 10-year. Usually it's the other way around. Obviously, if you tie your money up for a longer period of time, much like a CD, you usually get a higher rate of return. Well, an inversion means the opposite. It means you're actually getting paid higher for the 2-year bond versus the 10-year bond. That's a very negative sign of the economy. That's a very very accurate predictor of recessions. And there are a number of key leading economic indicators, and for the most part, every single one of them is pointing to recession. Well, here's another one that I was not aware of, so it's a little bit new, but it states, this is from Business Insider, recession seems almost certain with 19 states in trouble already. And what they're talking about, and this was interesting, they're talking about unemployment increasing in a number of states. In fact, in this past year, 19 states, unemployment has increased, making a national recession almost inevitable. As they pointed out, there's a very high probability of recession. This is from Piper Sandler, chief global economist. And they stated, in fact, in terms of a leading economic indicator, whenever you've had this many states, this accounts for 40% of national GDP, every single time previously, we've had a recession. And then they go on to say that government figures actually show unemployment has risen in 30 states in the last 12 months. If you've been listening to the show, you know the last bright spot in the economy has been consumer spending. It stayed strong throughout every other indicator was negative, but that was the one bright spot that kept this. That's what's been keeping the economy afloat, and low employment. Low unemployment means people are still making money, still willing to spend, and consumer spending is about 70% of GDP. So it's a really big deal. And I said, that's the last shoe to drop. I've said this many times now. Watch unemployment. If you start to see an increase in unemployment, look out, because there's nothing left to stop the economy from going into recession. And again, we now have, over the past 12 months, 30 states have rising unemployment, and every time that's happened in the past, every single time, we have had a recession in the relatively near future after that occurred. So again, keep your eyes open. You need to be nimble. I know the market's been great, almost euphoric. I know people who are super excited just recently, with Nvidia earnings, and they had a significant amount of stock there, and the stock split that they announced and everything, and that's great for those that own Nvidia stock, at least for this period of time. Doesn't mean the rest of the market's going to do so well, particularly the rest of the year. That one stock may hold up. Who knows? We'll see. No one knows. But the reality is, don't allow that euphoria. I've seen this before. Don't allow that euphoria to cloud your judgment on what's really going on overall with the economy and the markets and interest rates and inflation. All those things play a part. And so many people are now really pointing out that it looks like we're headed to recession, and it'd be shocking if we don't. What do? You reduce your market risk. You get out of the way. You don't allow all of your money to be subject to that risk, because the risk, as we have hit all-time highs recently, when you're that high up in the markets, the high end of the range, the risk is much higher to go to the downside versus the upside. Could it go up from here? Sure, of course it could. But could it also go down? Absolutely. And just from a statistical standpoint, from a chart standpoint, from a historical standpoint, from an economic standpoint, the odds are far, far greater we're going to go to the downside than the upside from this point, at least sometime in the near future. Again, JP Morgan is predicting it before the end of this year, before the end of 2024. Again, a lot of reasons behind it. I'm going to share a few of them right now. One of the biggest reasons why you're seeing so many of these economists, market predictors being so negative or pessimistic about where the stock market's going, and the economy for that matter, is because of something here. This is a chart, which I'll post on the website, yourpersonalbank.com, but it's showing the change in household net worth since the start of each presidency for the last two presidential cycles. Of course, the first 3.5 years of Trump versus the first 3.5 years of Biden. And of course, the Trump period at 3.5 months in, adjusted for inflation, the average net worth of change in household income increased 30%. So in about a 3.5 year period, the average household in America increased their wealth or net worth by about 30%. It's almost 10% a year, folks. That's pretty impressive. The Biden period so far is basically at zero. In other words, there's been no gain. There's been increases in incomes, yes, but there's also been dramatic increases in inflation, and basically they've offset each other. So in other words, the last 3.5 years, the average increase in household net worth is basically zero. People are not making more money. They don't have more money to spend. And that is an anomaly in the U.S. economy. That almost never happens, folks. Net worth, household net worth in the United States, it's nearly always on an incline, sometimes faster at some years than others, of course, but generally speaking, almost always in an incline. During recession, you see some dips, certainly, and we have seen that, but most often people are making more, earning more, gaining more net worth. Well, we haven't seen that in the last 3.5 years, and this is why people are so frustrated, angry, upset, and concerned, because inflation is eating at any gains that they're making. So if you're earning more money, you're making more money, the inflation is eating it away. And there's a lot of reasons behind this why we've discussed this many times on this show, why we have the inflation that we have. A lot of it has to do with, well, we spent or sent about $200 billion to Ukraine, for example. That doesn't help our country. The money we've sent to Ukraine, put this in perspective, we could have built 6 border walls. We could have fixed Flint's water system something like over 200 times. We could have given every homeless vet $2 million. Not that I would recommend that as a way to solve the problem, but with $2 million per homeless vet, I think we could solve the homelessness problem with the vets. Also could have given $50 million to each family in Maui. Some people estimate that it would cost about $20 billion to end homelessness in America, which is about 1/10 of what was sent to Ukraine. It gives you an idea of the priorities that our current administration and government leaders, those that voted for sending more money to Ukraine versus taking care of our own. You should take care of your own first, right? Just like in an airplane. When you're in an airplane, what do they always teach you? If there's a loss of oxygen or whatever, and you've got a small child or something with you, what do they always say? Put on your mask first, and then you put the mask on the child. Why? You, as the adult, you cannot help the child if you don't help yourself first. If you can't breathe, you can't help your child breathe. And that's the basic bottom line problem.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference. In the first segment, it's so important. This is worth repeating. If you missed it, go to yourpersonalbank.com. I'm going to highly encourage you to listen to it because I've run across some folks recently that have been taken advantage of or misled, some even fraudulent, in terms of what they thought they were getting and what they actually got when it comes to terms of high cash value, your personal bank type policies. That just angers me because either the agent or a person they worked with either didn't know what they were doing or they misled and they were fraudulent. In other words, they thought they were getting a high cash value policy to grow their money, insured, guaranteed, tax-free, liquidity, high liquidity, and positive arbitrage, and yet they got something totally different. I ran into a couple folks where one of them had no cash value at all for the first 2 years. I'm going to tell you real simple, real quick, it's so important. If you're looking in this or you've already done it, even if it was a number of years ago, I might be able to help you reverse it. But you have to have, if you're going to fund this, you want to have at least 50% of the money available, the money you contributed, day one, if you're funding a plan multiple years. If you're doing a front load where you put most of the money up front, you want to have at least 80% of the money available day one. So if you don't have that situation, you were not sold a policy that maximized cash value. It is not structured correctly, or it's not the right product or the right tool. If that was not your goal, that's fine. But if your goal was to maximize cash value, you have to have at least 50% of the money available day one that you contribute on a multi-year plan, or at least 80% of the money you contributed day one in a front load or more you put most of the money up front. If not, contact me at yourpersonalbank.com. There are solutions, and sometimes even I can help you refund, again, if you were misled or even fraudulently sold something. So I'll be happy to help you because I don't like to see people getting taken advantage of. I've shared this oftentimes on the show too. My show goes national. There are so many people that listen to this, including compliance officers, attorneys, you name it, that I don't have the luxury to embellish or exaggerate. I have to be accurate with this show, and that's something that's very, very important to me because this is a tremendous financial tool that can do amazing things for people, can help them grow their money, insured, guaranteed, tax-free, highly liquid, and create positive arbitrage. But if you don't have the right tool, or you don't have it structured correctly, it won't do that for you. It will not work. You go to Home Depot and you need a hammer to hammer nails, and the salesman sells you a saw. Now, there's nothing wrong with a saw per se, but it's a terrible tool to hammer nails. It cuts wood great, but it doesn't hammer nails. You see what I'm trying to say? So I've run into some folks recently. It's frustrating, but the good news is I'm helping them unwind this and get it fixed and taken care of so they'll be in a much better position going forward. But they wanted a hammer and they were sold a saw and didn't realize it. So I can help you get what you want. Now back to some of these other economic things that we need to really focus on. It's so frustrating because we're in a situation where we've done this to ourselves. A lot of it's been the government spending that's caused all this inflation and lack of, like I stated earlier, household net worth has not increased in the last 3.5 years in the Biden administration. In comparison, the first 3.5 years of the Trump administration, it increased by roughly 30%. it just shows you kind of the difference. It's significant, the difference economically that we're seeing. Another thing is when you think about just taking the 200 billion alone that we sent to Ukraine, Google states that there's about 650,000 homeless in the United States. Well, if you divide 650,000 into 200 billion, do you know that that means that every homeless person in the United States could have received over 300 grand? Now, I'm not saying we should give $300,000 to homeless people, please understand, but we certainly could have allocated some resources to help those people. A lot of them have drug issues and things like that. Maybe we put them in a drug rehab, whatever. My point is the resources are available to fix the problem, yet our leaders, our elected officials in the current administration, the Democrats and the rhinos keep insisting on sending the money to Ukraine. You wonder why? Well, it benefits them, not Americans. If you want to go into further, just this most recent aid package, where it was $95 billion, most of it going to Ukraine and Israel and all that, the 35,000 approximate homeless veterans could have received 60 grand a year for 45 years. Do you think if we had 60 grand per year, we could take care of our homeless vets? Do you think those people might, deserve it? Again, drug rehab, counseling, whatever it is they need. But do you think our homeless vets deserve more? I do. And the last thought on all this is, the latest Social Security reports, trustees reports, are not good. And they're saying Social Security is not going to be able to pay full benefits in the next 6 to 8 years. Well, if Social Security is running out of money in the next 6 to 8 years, do you think we should probably stop sending money overseas to Ukraine and other places? Maybe we should take care of ourselves first. Still focusing on this inflation thing. Here's another few key points to help people better understand. The price of coffee, for example, is up now 78% since September. And because coffee prices have gone up so much, the federal government has decided they will no longer be factored into the inflation number. I've shared this before. The government picks and chooses which items they use. They pick a basket of items to count the inflation numbers. And when one of the items in their basket goes up too much, they just drop it and replace it with something else. So coffee now is increased too much for their liking, so they're replacing it with something else, therefore playing with the numbers, making the numbers look better than they really are. Anyone who goes to the grocery store or the gas station knows this, but that's the game our federal government has been playing now for years, folks. I've shared in a previous show, in fact, as of a few months ago at least, that if the government counted inflation like they did back in the 1970s, we didn't have 4 to 9% annual inflation. It's more like 10 and 12%, and I think the worst year was about double, like 16, 18%. That's the actual real inflation on the stuff that people really buy, okay? Here's another fact. 89% of Americans have had to adjust their budgets under the Biden administration. And here's a study like Consumer Reactions on the cost of living. 64% of Americans now spend less on non-essentials. Also, the same number, about 2/3, pay more attention to bargains and deals or offers when they go shopping. 39% don't go out to dinner as often as they used to. And a third use less gas or electricity in their home than they used to. About a quarter have given up on hobbies. Only 11% of Americans have not changed their behavior at all. 89% of Americans currently are affected right now in some way of inflation. And like I said many times, don't let the government numbers fool you. Don't let the politicians fool you when they say inflation is coming down and all this kind of stuff. That is incorrect. That is not a fact. The fact is the rate of inflation is lower than it was. In other words, the rate of increase has reduced, but inflation is still going up. In other words, prices are still going up. They're not going down. And this is one of the best analogies I think I've ever seen anywhere to help people understand the cumulative effects of inflation. Here's the analogy. Let's compare inflation to weight gain. So let's say you gained 4 years ago, you gained 9 pounds. And then the next year, 3 years from there, you gained 6 pounds. And then 4 pounds and then 3 pounds. So 1 year you gain 9 pounds, the next 6, the year after that 4, the year after that only 3. Now you notice each year you were gaining less weight, but you were still gaining weight, right? So the answer is now, the answer to the question is this: did you gain 3 pounds or 22? That is the cumulative effect of inflation. It's really not that complicated. So just because inflation was up 9% one year and then was only up 4% the next year, it doesn't mean it went down. 9 plus 4 still equals 13, right? Inflation those 2 years went up 13%. Just the rate of increase slowed down. This is why people are hurting. This is why people are feeling it, because as it continues to go drag on and on each year, it's adding on to the previous damage. It's cumulative. It's the cumulative effect that's what's so damaging about it. Now, the last thing I want to touch on in this segment before we come up on a hard break is this cashless society. I was so glad to see recently the House at least passed no central bank digital currency. That is great news, because if we have a cashless society, we have a central bank digital currency, for example, it means no cash, zero. And it doesn't mean mostly cashless and you can use a little bit of cash here or there. Cashless means you're going fully digital, fully traceable, and fully controllable. A lot of people don't realize this. A cashless society means there's no more, tuck away cash. For example, you have somebody who's trying to leave domestic violence, right? They can't do that. There's no more purchases of off marketplace because you would risk bank fraud. There's no more garage sales. No more cash donations to a hungrily homeless person, for example. You can't slip cash into the hands of a child from a grandparent. There's no more money and birthday cards. No more piggy banks, tooth fairy, none of that stuff. And no more selling, things from your home you no longer want or need for a little bit extra cash. Cashless or central bank digital currency would literally mean banks would have full control of every single cent you own. Every transaction would be recorded, and all your movements and actions would be traceable. See, folks, they're selling it on the idea of convenience and all that, but the real reason behind why the government wants central bank digital currency or a cashless society is they want more control. They want to be able to track you. They want to be able to track every transaction. And then, of course, obviously, tax every transaction. Do you know, I'll share one last thought. Do you know in Japan, people don't file income taxes? They don't file tax returns? The reason is because the taxes are already taken out before they receive it. In fact, those people don't even realize what it's like to file a tax return because the government is already paid up front. A cashless society or a central bank digital currency would allow our government to accomplish the same thing. Do you want our government to have that level of control? I know for my vote is no. So I was glad to see the House pass it. Hopefully the Senate will. I have no idea what this current resident in the White House will do. Probably veto it. But at least it's a start. We need to get that passed. Stay tuned in the last segment. I've got some more great information and some stuff coming up that you're not going to want to miss.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference. So before I run out of time and forget, I want to announce, very excited about next week's show. I'm going to be interviewing David Walker. He is a former Comptroller General for the United States and CEO of the U.S. Government Accountability Office, or the GAO. It's kind of like the head accountant for the U.S. government. He also served as one of 2 public trustees for Social Security and Medicare. David's going to be sharing with us the real numbers, what's really going on with our federal government as far as debt, Social Security, and all of that. I'm going to highly, highly encourage you to stay tuned to next week's show because you don't want to miss that. I've also had some great response, by the way, from a show I did about a month ago where I interviewed Sheila with Truth in Accounting. and Sheila Weinberg, and we discussed a lot about Social Security and what's really going on behind the scenes and what's going on in these government accountability and such, so that you know what to do, what's really going on with the numbers, and so you can plan accordingly. My focus, again, is give you the facts. I'm not trying to scare anybody. I just want you to know what's really going on so you can plan and make better decisions. So that's the bottom line. So let me share a few other things I think here you'll find very, very valuable, very interesting. A lot of data has been coming out about things that have happened in the last few years that people were like scratching their heads and wondering how in the heck, why did that happen? And I used to think, well, that'll never happen. And it's interesting how so many of these things that we thought would never happen, or even conspiracy theories, are becoming true. And I'm not a big conspiracy theorist, but it's amazing how many of these things are actually coming true. So here's an agreement, a purchase agreement between Pfizer and Canada, the country of Canada, that is. And they stated this was in October of 2020. And remember, back then they were telling us it was the COVID shot was safe and effective and all that, and there was no side effects and all this. In the purchase agreement, this is the legal document, it states, the purchaser, which is the country of Canada, further acknowledges that the long-term effects and effectivency of the vaccine are not currently known, and that there may be adverse effects of the vaccine that are not currently known. Folks, the bottom line is, this is what I was saying in the very beginning. You can go back to this show. You can go to yourpersonalbank.com, and I've got shows that go all the way back for years, and I was discussing this early in 2020, where I was stating this is a new vaccine, or it wasn't early, it was late 2020 when it came out. And I was stating in the very beginning, if you're healthy, why would you take an untested, unproven vaccine? We have no way of knowing what the long-term side effects or even medium-term effects are, because it's new. I wasn't even saying it was bad, it was just new. And I said in a few years, we'll know what some of those effects are. And of course, we're seeing that come out as we speak, almost every day. And here's another interesting fact. Ivermectin works in Mexico and just about every country but the United States. This is true. I have some friends and family that live in other countries that I know. It's not the problem. It's not the politicized issue in those countries that it is here, and they use it effectively there. Also, voter ID is used all over the world. Nearly every country in the world uses voter ID, but when it applied in the U.S., it becomes racist. Again, a political statement. Defending Ukraine's border is good, while defending the U.S. border is bad. Well, that's just ridiculous and stupid, and most people see that. The level of lying that you see is what you see in full-blown dictatorships, and that's the sad part of what we're seeing in our country today. It's a sad state of affairs that we are in right now. I never thought in my lifetime I would see what we've seen, and that's why I think so many people are waking up, and that's good. But here's some other stuff that's, I think, important and valuable to keep in mind. Do not forget this. Here are some things your government gives to illegals, but not to you. Do you know they'll give illegals free tax preparation up to $350 per family? I don't know about you, but I've always had to pay my accountant or CPA, and even though none of them are actually working, they'll also receive returns via the child tax credit, which means they'll receive money. So not pay into the system, but still receive money. That seems real fair. They get free work permit attorneys, free asylum attorney, free Medicaid coverage, and free vaccination clinics. I've never seen any of that. They get free WIC, which is Women, Infants, and Children cards, which amounts to $400 to $800 a month on top of 3 free meals a day. There's free Department of Transitional Assistance or welfare checks. A family of 4 will pocket $28.80 a month. There's free Uber or Lyft rides to schools, grocery stores, doctor appointments, hospital, etc., and entertainment. Free public transportation, but why do they need to take a bus? They can get a free Uber, right? Free transportation to church. A lot of times it's church provided. Free postage stamps, envelopes, notary service, and free English as a second language classes. Oh, don't forget 24/7 security. Now, by the way, none of this is free. Tax dollars fund all of this. We're paying our government to build new citizens at our expense, and they're replacing us with them because they think they're going to vote for them. I shared that very extensively in last week's show, showed the documents It's on the website. Go to yourpersonalbank.com. There are legals that are been caught actively voting for literally decades, court cases. Some have even served jail time. This is real. This happens. And I shared the federal law that passed in 2020. If you don't believe me, go to the website, yourpersonalbank.com. It's posted right there. The federal law, USC Code 18, that states a illegal non-citizen alien can vote if they resided in the United States prior to the age of 16 and they believe that they're a citizen. It's nothing to do with legal stuff. It's a state of mind. If they were here before age 16 and they believe they're a citizen, they can vote legally according to our federal law. Here's the other thing interesting about all this. There's undeniable proof, like I said, that our citizens are voting. And this is also undeniable truth that the Democrats, they're an enemy of we the people. They're supposed to represent us, but they're actually acting as an enemy. I mean, this is what an enemy would do. Can you think of anything that a enemy would do differently that hated the citizens and we the people? It's hard to imagine a government doing anything beyond what they're actually doing. And by the way, if you need to start a new job in the U.S., you have to provide proof of a citizenship or a work visa. Why don't we require proof of citizenship to vote in elections? By the way, you need an ID to go to the bank, airport, doctor, pharmacy, school, gun store, fishing, hunting license, daycare, hospital, bar, workplace. But voting? Not important. You see how ridiculous that is? And again, most people are starting to wake up to that. We still have some hangers on, but hopefully they'll come around and wake up. This is the state of affairs that we're in, where our country is and where our economy is. But there's some good news. Again, people are waking up. And this is the encouraging part I want to leave you with, because I don't want anybody to feel too down. I love this little story here. It said this person had a friend who grew up in China, and she asked why so many Americans watch the news. And I confused. I said, well, what do you mean? She goes, well, in China, no one watches the news because we all know it's propaganda. I guess Americans haven't figured that out yet. You know, that's so true. And I love this statement. And this is from Teddy Roosevelt. To anger a conservative, lie to him. To anger a liberal, tell him the truth. Boy, does that make a lot. Boy, that applied to today's world. That was Teddy Roosevelt 100 years ago. When should you start trusting the government? And I think this is a good barometer. When corrupt politicians start going to jail, that's when we can start trusting the government again, right? I mean, that's really what it comes down to. And one last one, this is from George Washington. A free people ought not only be armed and disciplined, but they should have sufficient arms and ammunition to maintain a status of independence from any who might attempt to abuse them, which would include their own government. This is a quote from the father of our country, George Washington. My fellow Americans, your ancestors started an armed revolt over a slight increase to their breakfast tea. I love that. Meanwhile, many of us hid in our homes for 3 years over a virus that your own government subsidized and released. Stop embarrassing your ancestors. I just thought that was great. And that just fits right into how I felt about all this. And that's why I say there is a new variant out there. There is a new virus out there, and it has been catching on, and it's been spreading around the world rapidly. And the name of that virus is waking up. If you haven't caught it already, I certainly hope you do soon. And that's why I say I'm hopeful. If you've been a long-time listener to this show, you know that a couple of years ago, I mean, I got really fired up in 2020 when they started shutting down the businesses, small businesses, because I'm a small business owner. I'm an entrepreneur, and that hit home for me. I really laid it out there, and I was really angry and really frustrated for the first couple of years there. And the reason I've gotten less so, I haven't changed my beliefs. I'm just as firm and staunch in where I stand when it comes to freedoms, when it comes to our country. It's because I'm believing in I knew the one thing that would save us is the American people, and that's as if enough of them woke up. I was just watching a little bit of the Trump rally in the South Bronx. Folks, I don't think in my lifetime I would have ever seen anything like that. A Republican candidate for president in one of the bluest places in the country, and there are tens of thousands of people there from every stripe, background, you name it. This country is waking up. We're witnessing history. I was a little too young to really, I didn't really see the Carter years. The only thing I remember is I was in school riding a school bus, and I grew in an agricultural community in Missouri, just outside of Kansas City, actually. A little place called Peculiar, Missouri. Those of you know that is. And I remember riding in the bus going to school and seeing farm tractors out there with signs saying, "Bank, take it, I can't afford it." That's about all I remember of the 70s. But I do remember, I'd served in the military and Reagan was in office. And I do remember being there and the sense of patriotism and pride at being an American. And some of the guys that were in the unit with me had been there several years prior during the Carter years, and they shared the stories of how dramatically different it was. Folks, it can turn around, and it can turn around fast. And I believe we're seeing the same type of thing we saw then. A move of patriotism, being proud to be American, wanting our society and our country to be what it used to be not that long ago, and taking us back to what makes us great as a country. So I'm seeing it, we're experiencing it, we're witnessing it. Man, what a time to live. It's exciting. It's not boring, that's for sure. So as I stated, as always, stay tuned. Like I said, next week I've got David Walker interview, U.S. Comptroller, former Comptroller of the U.S. government. That's like the head CPA. He was a former Social Security trustee. We're going to be sharing some great information next week, so don't miss it. And as always, as long as it's on our money, in God we trust.
Listen Tuesdays at noon and Saturdays at 1 to the Your Personal Bank Show for more information. Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. This show is designed to provide accurate and authoritative information. The presenter and guests of this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Some products discussed may have limitations and not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Dividend rates and bank line of credit rates may change. For current rates, contact Ference at 866-268-4422 or yourpersonalbank.com. Again, that's 866-268-4422 or yourpersonalbank.com.